one, we have to cover Bitcoin here because, as you can see, Bitcoin is up 5.6% in the last 7 days and it's also up almost 1% in the last 24 hours. So that's something. But I want to talk about some of the developments that have happened overnight inside of Bitcoin. That is actually pretty interesting. So we're going to talk about this. Anyways, remember, I'm not a financial advisor, none of this financial advice, but let's get straight into it, guys. And if you can see here, Bitcoin is pretty much inside of a ascending channel here. Now you could try to say a rising wedge, which is bearish, but that doesn't look like a wedge. That is definitely a channel. So this is an ascending channel. And as you can see down here, when you come into an ascending channel from a downtrend, it's more likely to continue downwards. And then if you're coming into it from an uptrend, you're more likely to go, continue in an uptrend. So this is the ascending lower trend lines. And as you can see here, the ascending upper. So this is pretty interesting because when you look at this, we just came into this ascending channel essentially from a downtrend. So if we're going by technical standards here, then, obviously we should continue downwards, right? But there is a possibility that that doesn't happen. Now, what would that possibility be? Well, first of all, if we can break this resistance right here at 91.9K, break into that 92K zone and get up to here to 94K, we have a better chance of breaking out to the upside because it's not technically out of the channel until it's out of the channel, right? Until it does something like this. It actually breaks past it and goes towards 100K. So if we see Bitcoin breaking down right now, then that is essentially a confirmation that we're bearish and this is the bear market starting to, speed up. Like if we crash right here and we come right out of this ascending channel, going down back towards 88K, 89, 88K, 86K, if we do something like that, then that pretty much is a confirmation that the bear market is here to stay. And then again, if we can break past 94K and then actually get all the way up here to 100K, then that is a confirmation. Not necessarily confirmation, but that is, it's a suggestion that we might be able to go a little higher, right? Because we could still get rejected even if we break out of the ascending channel. We could still get rejected at 100K. So we'll see what exactly happens there with that. But another thing here, the percent R trend exhaustion, this is the long-term trend, the blue line, and then the short-term trends right here. Notice how the short-term trends coming down, long-term trends actively going up. If these two cross right here and they both go up, that is extremely bullish, and you'll probably see Bitcoin going towards 94K or 100K, right? Or if we end up crossing right here and then downwards we go, then that is going to be the bearish confirmation to where we go down to 88K and then 86K and then continue to make our way down. So this is the most important thing that you want to look at right here. So just go to the 4-hour chart and then look at this upward movement here. Just look at it. Just look at how we dumped here and then, make the little ascending channel yourself on your own charts. So then you can keep going back to your charts as a reference. And then you'll know what's about to happen. So make sure you just, set it up on your chart. And if you don't know how to use TradingView, you just come over here to the trend lines here to the side of the screen. You take it and you pretty much just draw your trends. You take the other one, you draw the other one, and just, follow those patterns. So that's really all you need to do. And yeah, we should, I don't want to say we should break out, but a little bit of things are leaning towards the bullish side. For one, the long-term trend coming up here is really bullish, but if they cross and they go down, that's pretty bearish. But we want to see them cross and then go up, right? So that is what we want to see there. And then when we look at the MACD, selling pressure is starting up a little bit here, but it's slowed down a bit. We'll see if it keeps coming, but if it does, we end up breaking this trend line and going downwards. And anyways, going to the hourly chart here. Well, actually, no, I think it's the 2-hour chart I wanted to look at. But yeah, just look at how there's not much selling pressure here now. The selling pressure has sold off pretty much. And now we're kind of seeing a little bit of a recovery here on the 2-hour chart. And then you can kind of see it wants to break out. It does look like it's going to. So that's pretty interesting. And then we have the percent R trend exhaustion for the 2-hour chart, where the long-term trend is completely overbought, but it's staying overbought. And then the short-term trend has temporarily pulled back. So when the short-term trend catches up here, you might see the long-term trend and the short-term trend go up a little bit higher, get even more overbought, and then they'll have a dump together. Or it might be the same where the long-term trend stays overbought and then the short-term trend comes back down. Or it could be vice versa, where the long-term trend goes down, short-term trend stays up, and then once the short-term trend is done trending, then you'll see that crash. So that's why I really like using the percent R trend exhaustion. It's a free indicator, by the way, guys. If you just go to indicators and then type in percent R trend exhaustion, you'll find it. You just come up here, type in percent R trend exhaustion, and you can see it's by up, slide down. Oh, I spelled exhaustion wrong. They already had it spelled out for me anyways. But yeah, there we have it right there, up, slide down. So I always use the trend percent R trend exhaustion. It's really good. It's almost similar to using not the MACD. It's almost similar to using like a RSI or like the stoch RSI, stochastic RSI. So it's kind of similar to that, and I used to use the RSI before, but I find the percent R trend exhaustion to be better and easier for me to track as opposed to the RSI, but it's pretty similar. But yeah, this is all I got for you guys today. If we continue to break out, I will switch into like bullish mode if I end up seeing this breaking out of this area here, while also simultaneously breaking the previous lows here. So we had a double bottom here, and then we kind of recovered a little bit, and then we kept breaking down from there. So if we can get back up above 100K, where we pretty much bottomed out there before the next big drop, then I think that we would be in a good bullish zone. So we just got to get past 100K. Then I'd be more comfortable with switching to a bullish stance. But until then, I'm still bearish here, even though I do believe we actually could break out to 94K pretty soon. I'm still bearish. But anyways, because it could easily get rejected here, easily. But yeah, anyways, this is all I got, guys. Hit the like button, subscribe. Remember, I'm not a financial advisor. None of this is financial advice. And as always, I'll be back with another video.